Hey, Dennis Tubbergen here with another video market update. It is March 9 on Friday, actually, about 3:30 in the afternoon, as you can see on my computer screen here. And I have on the screen in front of you a daily chart of the Exchange Traded Fund, DIA, also known as Diamonds. It tracks the Dow Jones Industrial Average. And again, we're using the Chinese candlestick chart that it's our favorite chart, really. The green bars on the chart represent days the market went up. The red bars on the chart represent days the market went down. And if you take a look at the market top here, and the market top occurred back on January 26th, so going on about 6 weeks ago, 5 weeks ago, something like that. We had an intraday high here of 266 roughly. And then over here, if you look at the intraday low on February 9, it was 242. So about a 9% decline. Now, if you take a look at the rebound since then, we haven't seen the market be able to get back up to surpass that high. So we're thinking here that the probability probably favors the downside, although if you take a look at the stochastic indicator here on the bottom, it indicates that stocks might be oversold here. Now, if you look at the S&P 500, or the Exchange Traded Fund that tracks it, here we'll look at SPY, same indicators, you see a chart pattern that's fairly similar. You see a decline and a rebound, and we haven't been able to get back to that high. Now, a bit of good news maybe for stocks today is that if you look at the NASDAQ, and this is a chart, a daily chart of QQQ, the Exchange Traded Fund that tracks the NASDAQ, you see that here we have the high back again on January the 26th. However, we now see that we have a new high here. So that's good news, and it is a bit of a divergence. You'd like to see these markets moving lockstep. And if I look at the Russell 2000 and I look at the intraday high here, we've got a number here on 124 where it reached the high, and we're not quite back there yet, although we've passed the last Fibonacci retracement numbers. So what does all this mean? Well, I mean, stocks are a bit of a mixed bag, and you would like to see a confirmation from all these indices so that when QQQ or the NASDAQ makes a new high, you'd like to see the S&P 500 and the Dow and the Russell follow suit. That's not happening. However, the news is a little bit better than it was because we do have one index making a new high. However, we still feel that more downside is a higher probability until we see some confirmation from another index, something other than QQQ. Now, if we go back and take a look at a weekly chart of the S&P 500 and take a look at where we're at here, you see that we do have something called this week an engulfing reversal. That can also be bullish for stocks. So moving ahead, we're going to be keeping an eye on whether or not we do make new highs on the S&P and on the Dow, and see if they can confirm the new high we saw today in the NASDAQ. That's today's video market analysis. Have a great weekend.